Good morning, ladies and gentlemen. It's my pleasure to welcome you to the 2023 half-year earnings call of Photon Energy. My name is Georg Hotar. I'm the CEO and interim CFO of the Photon Energy Group. And to my left and to the right of your screen is Michael Gartner, the other co-founder of Photon Energy 15 years ago, and who has been building up and running our Australian business for the last more than 10 years, and he's also Group CTO. So I will run you through our presentation, and at the end there will be opportunity to ask questions. So highly welcome. So today we'll do a very brief introduction, as we assume that most of you know our company of the Photon Energy Group, with a few updates on key numbers. We'll be discussing the business development in the first half. I'll run you through the financial results, both for the first half year and the second quarter, and we'll be discussing about the outlook for the rest of the year before we get to the Q&A session. So just very quickly, we have been in business since 2008. Our headquarters in Amsterdam. We have activities in over 10 countries. We have grown in terms of headcount very dynamically in the last couple of years, now exceeding 330. And we're obviously a publicly listed company. Our shares are traded on the regulated markets of the Prague and Warsaw stock exchanges, and the open market of the Frankfurt Stock Exchange, and our shares also traded in the Xetra system. We're currently covered by 4 research houses, and across the focus areas of the Czech, Polish, and German capital markets. A very important part of what we do and how we do it is ESG, and here it is important to point out that we are as an issuer rated by IMUG Rating, a leading German ESG rating agency, with the result of very good. This is a rating that has been renewed or reconfirmed after 2 years after the initial rating, where we also managed to improve our rating from 75 to 76 out of 100 possible points. In terms of our business lines, a few headline numbers. We currently have a project development pipeline exceeding 1.2 gigawatts. We have to date constructed over 140 megawatts, the vast majority of that for our own portfolio, which currently stands at 113.1 megawatt peak of generation capacity, with another 30 megawatts in various phases of construction. In 2022, we generated over 120 gigawatt hours of electricity, and expect to grow that number this year. A very important part of our business model is also the provision of operations and maintenance services, both for our own power plants, but also those of external customers. And here we are happy to report that in the last 2-3 quarters, we have seen a very encouraging acceleration in signing up new customers. So we have exceeded the 500 megawatt mark. So now we stand at 540, and in this business line, which is very important and strategic for us, we expect that growth to continue growing and continue improving. Through the acquisition of Lerta, we have entered the energy trading and flexibility aggregation business, all enabled by a virtual power plant software. And at the moment, we have 290 megawatts of capacity, both on the supply and the demand side, connected. And one of the highlights of the first half year is as well that we have been able to expand our presence in the Polish capacity market by succeeding in the additional auction for the demand side response flexibility services to the Polish transmission system operator, where next year we will have 389 with 389 megawatts contracted. And we'll also touch today upon what we consider to be the key activity in our water business line, which is our remediation technology, with a particular focus on the remediation of groundwater and soil contaminated by PFAS chemicals. In terms of our footprint, we are active and on the ground in our 5 core countries in the CE region, which are Poland, the Czech Republic, Slovakia, Hungary, and Romania, which currently keeps us most busy, as that's where we are focusing our investment activities for the expansion of our generation portfolio. And the second market is already for more than 10 years, has been Australia. And as you can see, we also have activities and customers outside that footprint area. So for specific services, we have customers essentially all across the continent. So the key points and highlights of the first half year of 2023 for us relate, of course, to electricity generation, as this is the most important revenue streams in terms of the bottom line impact, as electricity generation segment provides us with the highest EBITDA margins. And here, the first half of this year has not been very joyful, as we were hit by a combination of, and our results were impacted by a combination of 3 main factors. One of them is that we have suffered a delay in getting our first batch of PV power plants that we essentially managed to complete in terms of construction and get them ready to connect at the end of last year or at the beginning of this year. However, due to many local circumstances related to the commissioning process, we have experienced significant delays. At this point in time, or by the end of the reporting period, we had 6 out of our 8 power plants commissioned and connected to the grid, injecting electricity and generating revenues. We have connected the 7th a few days ago and are hoping to connect the last remaining power plant in the next few weeks. At the same time, we have started the construction of our next batch of in total 9 power plants. So this delay in getting generation capacity online has had an impact in terms of the volume. The not so favorable weather conditions across our existing portfolio have further had a negative impact on the volume. So in total, the volume that we have been able to inject into the grid and sell has remained almost unchanged, actually with a 0.9% year-on-year reduction. And that is like for like. That means just looking at the existing power portfolio, a shortfall of 15.6% against our expectations based on energy forecasts. And on top of that, we have seen a material decline in average selling prices. So after a very buoyant situation in terms of energy prices, last year we have seen the pendulum swing into the other direction this year, and essentially over the last 3 quarters, where energy prices have declined significantly. I think we'll have an opportunity to discuss about the outlook and expectations a little bit later. Nevertheless, despite the delays, we have managed to connect 5.7 megawatts already in the first quarter, another 15.5 in the second, and we currently stand at 130.1 megawatt peak. Actually, this is 116, including the one that we just connected. In terms of new power plants, we have currently so the next batch is 9 power plants with a total installed capacity of 38.6 megawatts. So a little bit more than half of that is under construction already. The remaining 18.5 are at the ready-to-build stage in terms of permitting, and we will commence construction in the next couple of weeks. So it's basically a program we roll out and try to optimize across all 9 projects. As I mentioned before, we've seen very dynamic growth in signing up new O&M customers. So in the first half of this year, we've grown our customer base by 158 megawatts, which, given the number at the beginning of the year, is substantial growth. And here we really see very strong momentum, and our regional footprint and the quality we provide to external customers, as well as the ability to bundle O&M services with other services like market access and balancing services, and in the case of Poland, also the generation of additional revenues to the generators through the capacity market is driving this growth. So there we are really looking forward to the next couple of quarters. We've expanded the project pipeline to over 1 gigawatt, and we'll get to that in a second. And there's also been a very positive development in the first half of the year is an acceleration that we see continuing in EPC services we're providing to our commercial industrial customers. That means these are solar installations, most of them on the roof, generating electricity for on-site consumption for large energy users. So this is very dynamically growing in Australia, and we also expect a similar dynamic over the next couple of quarters in our European markets. So on the generation results, I discussed already the lower volumes, the lower prices in the first half have been to the tune of 28%. So last year in the first half we had 245, now we're at 176. Here it is important to note that actually the shortfall from the segment or from the revenue stream coming from the market has been more significant, as the Czech portfolio also benefits from a subsidy in the form of the so-called green bonus. So when you look at the realized revenues, you see a very high number of 655 in the Czech Republic. So the significant part of that, or the vast majority of that, is actually the element of subsidy, which has more or less remained unchanged between 23 and 24. So the decline has been essentially larger. We still have some additional other power plants in the feed-in tariff regime, like in Slovakia. We have a few still left in Hungary, but as you can see, the share of generation capacity in the selling electricity into the day-ahead market, or in the case of Australia, the spot market on a merchant basis has grown year on year, and essentially 84-85% of our capacity is now merchant. It's important to note that in the case of Hungary, we have the option to return to the feed-in tariff scheme for most of our power plants that exited and became merchant at any point in time. However, for the time being, we're not prepared or not actively considering using that option to return, but it is available for extended periods of time. On the generation assets and the portfolio, so we discussed the expansion that we have had in the first quarter. We still expect to commission not only the last power plant from our second batch, but with a bit of luck and improved processes also on the side of the distribution companies that are connecting our power plants. We still expect additional growth in that in our portfolio, driven by the Romanian market until the end of the year. But the whole 38.5, that means those 20 that we have under construction, the 18.5 will start. Most of that generation capacity should come online towards the end of the first quarter next year, or in Q2. In terms of our project pipeline, you can see that there's been an addition in Australia, which we'll discuss in a second. But in general, what we're obviously observing the energy markets very closely, not only in terms of total price levels, but also the pricing structure intraday. And what has become very apparent, particularly over the last couple of weeks, is that the growing share of renewables, and in particular solar, is turning the pricing curve into or changing it in very dramatic ways. So at times when solar generation is high, electricity prices have been very close to zero, particularly on weekends, but in some cases even during the week. And also we've had a growing number of hours with negative prices. So the message of that is that we are essentially, we've decided to execute a pivot in our development strategy, and where we'll focus less on maximizing the installed capacity in our portfolio on pure solar projects, but we see the direction of travel in the future in hybrid projects. That means combining PV generation and energy storage, or all the way pure energy storage projects. And here I would like to point out that our project in Australia, in Boggabri, that we acquired at the end of last year, is now coming closer to execution, which would be our first hybrid project combining solar generation and energy storage. And this is going to be a blueprint for what we do in Europe. So at the moment we are going through an exercise where we look at our project pipelines across the market, where we can switch the ongoing development towards hybrid. We are also already developing opportunities for storage only, particularly in Poland. We are looking definitely all our new developments that will start from now on will be hybrid or storage only. And at the same time, we are while we will continue building solar only projects on the basis of the most mature end of our pipeline. At the moment, in the short term, mostly in Romania, we are also looking and considering the options to monetize some of our pipeline over the next couple of months and redirect resources to this new type of development. And of course, when we speak about energy generation and storage, our investment in Regen comes into play, and here we have made some good progress on the permitting of Yadnarie. Based on the geotechnical studies that we conducted, we have decided to downsize the project from the original 300 megawatt to 200 megawatt, also with a lower grid capacity of 115 megawatt instead of 150. But in terms of permitting, we're making good progress. At the same time, Regen itself has made very strong progress in completing its first pilot project in Carwarp, Victoria, where there's an official event scheduled for the end of this month, which then should prove that this technology is working both in terms of generation but also energy storage. And the important step for us is that we have a couple of months ago commenced looking for additional potential locations for the Regen solution, and given the stage we've reached, we have added 4 new projects with a total currently planned capacity of 455 megawatts into the feasibility bracket in our pipeline reporting. And Michael, if you maybe want to add some.
No, I think you've covered that one off. I mean, it's a very important part of our strategy moving forward, of course, with developments in the energy sector, energy pricing that would favor energy storage. It certainly makes sense from a perspective of taking advantage of the opportunities that in particular the Australian market, but it's much more a global perspective, particularly in countries with a good direct normal irradiation, which means direct sunlight availability. It's proving to be a technology that will be quite advantageous for many of the global markets. So we're very excited about what's happening, and I would say keep your eyes and ears posted for the end of this month.
Okay, thank you. So moving on to another, what we consider to be a very exciting topic is our PFAS remediation or nanoremediation technology, which we are now applying to the PFAS chemical contamination problem. For the last 2.5 years, we have been engaged in a pilot project with the Australian Department of Defence. That project has officially, in terms of measuring the results, ended earlier this year. And we have submitted the final report, which is still being reviewed. So what we can say is that the contract that we have had with Defence has been extended until the beginning of next year. And one of the important parts is after the arrangement is to evaluate how our technology can be used in the Department of Defence's efforts going forward to deal with PFAS contamination. If we look at it from a global point of view, actually from a European point of view, I think over the last 6 months, the press coverage of the PFAS contamination problem, was often referred to as forever chemicals, has definitely increased. So a topic that has been on the table for quite a few years already in Australia and North America, has also made it to Europe. So we see considerable growing regulatory pressure. The limits of human exposure to these chemicals is continuously being reduced. We see at the EU level quite a bit of activity. We also see that more and more member countries are introducing legislations, guidelines, and limits in relation to PFAS chemicals. So it's a topic that is definitely becoming more and more visible at the moment. So we are now at a point where we are convinced that our technology for the remediation of PFAS chemicals is working not only for groundwater but also for soil, and therefore has a wide range of applications. So we are now moving into the commercialization part, where we believe that until the end of this year and beyond, we'll be able to provide some interesting news flow. What we can also mention is that we have here in Europe, where, as I mentioned before, things are only starting. Last year, we have been engaged by Prague Airport to conduct a risk analysis of their situation in relation to PFAS, which we submitted this year, and believe that this cooperation will have continuation. But we see more and more entities, both in the public and the private sector, having to engage and address this contamination problem. So the development phase, this pilot project phase, has been very long, has been delayed for various reasons, most of them beyond our control. But we believe that we'll be able to talk about it a lot more going forward, and we'll also see a growing impact on our business. So on our financial results, and here it is. Of course, the picture a year ago was a bit better than today. The first and the second quarter, both of them have been challenging. The big dent in our numbers, of course, is mainly a result of our shortfall in electricity generation revenues. So compared to last year, when we generated in the first half of the year 16 million, we only achieved 11. Looking at the second quarter alone, we achieved 7.2 instead of 11 million. So this is a significant shortfall. We, of course, expected an increase, also based on higher generation capacity and volume. So the three reasons I think were explained. Given that electricity generation revenues have a almost direct impact on the bottom line, that of course feeds through the entire P&L. Looking at the second quarter, we have been able to increase or continue the picture of the first quarter, not however to such an extent that our other revenues from other business segments have grown year on year, so it has lessened the impact. But of course, none of these other activities has or comes even close in terms of EBITDA margin contribution to the overall result. As a result, we've seen in the second quarter a reduction in EBITDA by approximately 70%, from 8.1 to 2.5 for the first half. That shortfall has been slightly higher in terms of percentage, from 10.1 to 2.8 million. And at the EBIT level, after being negative in the first quarter, in the second quarter, we've at least been able to get to a positive number. That of course fed down all the way through the bottom line, which in terms of defined as net profit, where we generated a net loss of 3.3 million. However, the revaluation of our newly connected power plants and as a result, positive other comprehensive income has kept our total comprehensive income positive in the second quarter. Here, I think it's important to stress that we consider this other comprehensive income from the revaluation or valuation of newly connected power plants, where we essentially reflect the net present value generated through our investment activity as an integral part of our business model. And we spend a lot of time, effort, and resources to create those assets at costs that are below the value implied by discounting the future cash flows from these assets. So for us, this is an important element. It's of course non-cash, but it is we consider it an important result of our efforts. So there we have been able to maintain an even result. Of course, given that our first quarter has also been negative, the picture for the first half is negative, but we believe that we'll be able to improve that picture as we get towards the end of the year. And our balance sheet, in the first half, our balance sheet has grown, mostly driven by the connection of our power plants in Romania, and correspondingly, we have seen an increase in long-term liabilities directly related to the project financing signed with Raiffeisen Bank International for our newly connected power plants in Romania, which we executed at the beginning of the second quarter. Looking at our balance sheet, what is important to point out is that all our financings are all our project financings are fully hedged. That means we are not exposed to changes in interest rates over the tenure of these project financings. Our bond, of course, carries a fixed coupon, and only some, in the context of our balance sheet, minor working capital lines have variable interests. So we are to a very large degree insulated against swings in the interest rate levels. Of course, for new projects and new project financings, we are of course price takers at the time of concluding these financings. The important message is that we're currently, as we're building in Romania, we're also progressing on the corresponding project financing, and we have for new projects we're doing now in most markets, multiple options of banks who are happy to work with us and finance our projects. On the cash flow statement here, I will repeat something we have already addressed in when looking at the first quarter numbers, but also during last year, that our operating cash flow is impacted to a significant degree by our investment activity. So what I mean by that is that as we were building power plants last year, but it continues this year, in order to shorten the time to grid connection, we are front loading a lot of the procurement. So we are sourcing a lot of the components like modules, inverters, mounting structure, but also transformers ahead of time, which are then held as inventory. So a significant part of that negative operating cash flow is the result of a bump in inventory during the first half of the year that relates directly to our investment activity. But it skews the picture. That was the case also last year in the first half, and that basically has been repeated this year. Overall, we have managed to keep the change in net cash has been relatively low at -3 million since the beginning of this year. The outlook for the remainder of the year is the development so far, and given how we see the situation, management has decided to revise our guidance. So we've decided to reduce our revenue guidance from 150 million down to 110 million, given the range of activities we're involved in and business lines, and the various factors impacting each of those revenues are very difficult to predict. But this is a level that I feel comfortable with, given developments not only in the electricity market, but also looking at our components distribution business, the EPC business. At the EBITDA level, when we're presenting the Q1 numbers, we said that we would revise the EBITDA guidance and publish the half-year numbers, which is now. And here we have decided to reduce our guidance to 10 million from the original 24, and compared to original 29, and which is compared to last year's realized EBITDA of 24.3. That is a drop in 60%. Of 60%. It is a very significant drop. Here, I would like to point out, however, that this year the element of other comprehensive income, so value creation through creating generation assets, is also playing a significant role. I also mentioned that we are reviewing and considering the potential to sell some of our project rights, not at any cost and not in a fire sale mode, simply based on our pivot in thinking where the future lies. So we are considering in some markets to potentially dispose of some project rights, and the price levels that we see in the market indicated that would also generate capital gains, which again we would consider to be part of our performance. But looking at EBITDA alone, of course, one of the major items are electricity prices, and also generation volumes. So by reducing our guidance to 10 million, that's something that today we feel comfortable with. But of course, we are striving to end up at the end of the year in a better place than this guidance. But there's a lot of dynamics going on at the same time at the moment, and that's why we decided to update our guidance with a very conservative approach. Related to this, we are also updating one of our strategic goals that we have communicated back in 2021, which is the goal of 600 megawatts of generation capacity by the end of 2024. So we have reduced that quite significantly to 200 megawatt peak, and that relates to utility scale solar only. What until the end of 2024, and of course beyond, we would like to do is add hybrid assets. Boga may be one of them that could be finished by this time. I think it's a question mark at this point whether we would be able to execute additional projects of this kind until the end of 2024. Then the focus will be on storage only. But what I would also like to highlight is that in the future, there will be an additional item in our portfolio type of project, and these are behind the meter projects where we are investing either on the roof or on the ground next to an energy off-taker, and where we enter into long-term PPA contracts, and where we are deploying capital and based on mechanisms which in most cases are fixed price mechanisms with either price adjustment or indexation clauses, where we are also planning to deploy capital either on its own or actually as part of a wider offering to these energy off-takers. We are quite close to signing our first such project in Hungary, which may still get executed. That means built and connected this year. This is relatively small, below 1 megawatt, but we see really significant demand in this PV as a service type of offerings where we deploy capital. And what is important as well is that on the other side, we have very strong interest from lending institutions to provide us with project financings, actually at significantly higher debt to investment cost ratios than on our utility scale portfolio. So this we expect to also contribute. However, at this point, particularly looking at the end of 2024, it is difficult to say how many megawatts we will deploy in that category. So this concludes our presentation, and so we will be trying to answer your questions, and of course we also like to invite you to post additional questions. So the first question is whether we could put more color on the 10 million EBITDA guidance. Well, not off the cuff, I think, and not in detail. I mean, in principle, we are when we create our forecasts and budgets, and as you can imagine, this year with the swings in energy prices, we have been it's necessary to adjust our calculations quite frequently. So what drives this? So as energy generation is important, we have basically worked off and worked with the monthly futures prices in the markets where we are selling electricity. We always cross-check this with the German price levels, because these are the most liquid futures instruments. So it's basically based on expected production, and the price is indicated by these futures adjusted for the production profile of our solar assets. So it's essentially the current level of energy prices. Here, I would like to say that what we've observed just the last 2 days is that at the long end of the future prices curve, we have seen a jump. So the futures prices for baseload in Germany have been now hovering around 84 to 88 euros, and they've now jumped towards 100. So, and what is important as well is that in that futures curve, over the next 10 years, there's no point where we would even be close to our levelized cost of energy. So in other words, the market does not expect price levels to drop back to the 40, 50 euros that we've seen until 2021. So the expectations are that prices will remain or will tend towards the 100 euro level, even 10 years from now. So the fundamental case is healthy in terms of overall price levels. What we will see is probably further volatility in the intraday pricing structure, where more renewables, more solar in particular, will probably pronounce that drop intraday. On the other hand, what can also be expected is that with the advent and growth in in storage capacity in the network, also EV charging. There will also be more demand in those hours, so that maybe at some point the curve will again become a little bit less pronounced. So a long answer to a short question. So it's driven by to a large degree in terms of profitability by the pricing curve, and also updated forecasts on our other segments, but none of which has the same, relatively small variations in revenues. None of our other business lines has such a strong impact on overall profitability. So in terms of the EBITDA from new energy, we have so a key driver are the capacity payments from the Polish TSO, and we have been able in that area to generate some additional revenues. In the aftermarket, we have seen improving results on our origination and trading, to a very large degree driven by improved methods of forecasting of the assets that our origination and trading teams manages. So the balancing costs that we really incur have been reduced, largely driven by better forecasting, but also by fine-tuned intraday trading. And we've also had some progress in building behind-the-meter assets across the region. The next question relates to the PFAS pilot project.
Might be able to just add some color on the PFAS project in Australia. So it's actually very encouraging that we've had an extension of the contract. Yeah, we definitely don't treat it as a disappointment. It's reflective of a bigger project that Department of Defense is, of course, contemplating, and across many sites. So for us, this is an opportunity to elaborate on how we may participate in future remediation work. So quite a positive development in that project. And we continue to collect results. We're continuing to assess the performance of this technology, and also looking into how it fits into a broader solution for sites with different hydrogeology and different areas of contamination, different flow rates under the ground. So it's a very encouraging. We've had very encouraging results, and we'll continue to go through that development and commercialization process. So our efforts now are really around how can we deploy this technology in other sites, how we can scale the technology to be able to expand it into other locations globally. So that's where we're now concentrating our efforts.
I think what I would like to add is because there's reference taken that we expected some conclusions in H1 23. I think one important consideration is that here we're dealing with a counterparty that is as bureaucratic as it gets in general, but also for better or worse. But also there is a lot of effort in validating the results. So it is not like we submitted the report and somebody reads it and then there's a lot of effort.
An immediate outcome.
Yes, so there's a lot of effort on their side, and actually diligent effort to better understand and validate the results of our trial, where Department of Defense has actually a group of various advisors. So this is a process that, in combination with what I said at the beginning, simply takes time. But don't take this as I wouldn't take this as a reflection of the results themselves, in which we will definitely in the future have a better opportunity to talk about in details.
Okay, and a potential schedule for Australian projects based on regen technology. So there's two parts of that question. One of them is referring to the CarWarp project. So it's the first demonstration project of the full PV Ultra plus the energy storage system. It is, we are at the point now where the project is complete and will be officially opened at the end of this month on the 31st of August with official event, which we will be participating in. And I would say that from perspective of expectations, it would be really worthwhile to keep your eye out at that time. We'll certainly be informing all of our investors and stakeholders of that event and what will be discussed there. So that's that first part. The second part is around what happens next. So the next project that is likely to be built would be the Yadnari project. It's currently progressing through the final stages of the development activities. And we also have confirmed the site characteristics. We had to downsize that site due to the geotechnical constraints that we had, but it's still a large project, and it's still a project that will be significant from a perspective of its impact in the South Australian energy market. And what we would say about the timelines there, it depends on two factors. One of them is the ramping up of the production of the PV Ultra modules, because Regen are in the process of building a new facility to increase the manufacturing capacity to around 100 megawatts of technology of the PV Ultra modules, and that will enable in the next stage for a project of this size to be constructed probably over something around a 24-month period, given that we should be ready for construction in about 12 months. So that is essentially the timescale. At the same time, we're working on other projects that would follow. The projects concentrated in Australia at the present time, but we're also working on projects in other parts of the world, including South Africa, for example. So there's a lot happening, and yeah, we'll keep you informed about the progress on this.
Can you maybe answer this very last question now?
What geotechnical constraints? Well, it's actually because these projects are large, we end up, and part of the lessons learned from our first project in Yadnari is when we do site selection, we need to be quite careful around different underground constraints such as bedrock and the ability to use land that is otherwise constrained, perhaps by some seasonal flooding or other elements, because these sites are very large. And those are the constraints that we've worked with. But we've also worked hand in hand with what is more easily connectable into the network. So it kind of fits together quite well. A project of 115 megawatts AC with a very high capacity factor, because we can essentially produce energy 24/7 from this facility. It's a much larger project compared to traditional solar PV or even to traditional solar PV with storage. So we're still talking about a very large project, but yeah, of course we have to consider those geotechnical constraints and also access to water to fill the ponds. We only have to fill the ponds once, but it's another constraint that we're learning more about as we move forward with other projects, and we're adapting the project development process for future projects to have sites where those constraints will be considered very early on in the process.
Okay, thank you. So we'll go back on the questions. So the high eliminations in the first half of the year, well, those eliminations are of course related to intra-group transactions, and here there are two main drivers. One of them is related to energy trading, where the electricity from our power plants in Hungary and the Czech Republic are sold into the market by our newly acquired entities as part of the acquisition of Lerta. So where essentially there's basically a handover. But the other one that is very significant is related to our investment activity in Romania. So the way it works is that the projects are owned and realized by SPVs, of course, fully owned by the group. The EPC services are provided by Photon Energy Romania, again a group entity, and the modules, inverters are actually procured by Photon Energy Technology, which of course also has an external distribution business, but it's also the procurement arm. So there's an intergroup transaction with the modules inverters from technology, either to the our EPC arm or the SPV directly, as we've done it now in Romania. But then our EPC arm provides services to the SPV. So there's a lot of intergroup transactions. So when we build a lot, there is a lot of eliminations. I mean, there's quite a few other intergroup transactions, but these are the two main drivers, and this is also why there are such significant swings. The working capital development, higher receivables, VAT in Romania. Well, we have had a build-up in our inventory in technology, mainly related to batteries. Most of that at the end of last year, some of it in Q1 this year. The inventory turnover there has dropped significantly, but that is something we expect towards the end of the year to pick up again. And so there's at the moment quite a bit of working capital tied up in inventory, but that we expect to reduce significantly between now and year end. We have also had, I'm not sure whether in relation to an investment activity, there are also negative VAT float issues. So in relation to the construction in Romania, yes, there's some VAT that of course is recoverable, but it acts as a drag on our operating cash flow. And in the case of our first batch in Romania, these are quite significant and material amounts. I would say there's a lesson learned there from us, which we are actually actively addressing in the project financing for our next batch, and it is that we will also arrange for a VAT financing line for the project SPVs, so that it doesn't act as a drag on our central cash flow. So overall, yes, I mean, we will do our utmost and to reduce our working capital tie up. I would even go beyond that. I would say at this point it's also the advantage of being the new CFO is there's always a cleaning house possibility, where a lot of that relates to really having a closer look at all parts of the balance sheet where we may have or do have resources tied up. Of course, most of that would be cash, could also be something else, and how we can release them, particularly when there are either things can be done in a better way, like for example in this negative VAT drag in Romania, which in the next batch we can avoid by structuring the project financing or the construction phase financing in a better way. It is, of course, about reducing capital tie-up in inventory, but there are also other areas. So that is, and what is tied to that as well is as part of the review of our project portfolio. Are there projects that maybe are not in line with our strategic direction? So clearly, there we've invested a lot of effort and time into them, and it may be a good idea to release capital that we can redeploy elsewhere. So there's a lot of that going on at the moment, and one of that is a significant or wherever possible reduction in our working capital. The last question, could you buy back your bond in the market? We have checked, and the answer is actually no. I mean, we did, of course, when we had over the last couple of weeks, when there has been a drop in bond prices, we have it was very tempting. So the clear message has been that we cannot strongly advised not to do anything during the close period. So that was a hurdle. Well, in principle, we could, but it has to be in a structured process. So it's not like we can just go out and buy in the market. It would have to be in a structured way with proper announcements, and of course the offer has to be made to all investors. So we cannot go out and selectively buy from either specific investors or just ad hoc in the market. I would say, of course, we are following the situation very closely. We've been in touch with our bankers who have helped us with the placement of the bonds. Our reading of the situation is such that the German SME bond segment has seen materially better days than today. And of course, the big issue is that not only a few issuers have defaulted over the last year, but of course also liquidation of the KFM SME bond fund that has been announced some time ago, that now seems to get closer to being executed by the liquidators. And I think also the anticipation of that, given that KFM, based on the last available information, which was at the end of last year, our information is that they held at the end of last year around 3.5 million euros of our green bond. Whether that number is still up to date or not, we don't know. Whether they have been selling into the market at this point in time, we also don't know. But there's been an announcement that now the liquidation will proceed. Whether that happens in a structured way or in a non-structured way, we cannot evaluate. We have asked our bankers to kind of give us their opinion of the trading volumes and the movements of our bond prices over the last couple of weeks. So their evaluation is that somebody, and none of us knows who, disposed around 1.5 million of bonds in the market in a rather reckless and unstructured way. And whether that relates to that liquidation of KFM or it was somebody else is really difficult to say. So, of course, it's not a good picture. It doesn't help, but we've definitely seen this rather as the result of specific market dynamics, which then probably was exacerbated by reactions of other investors. I think the important message that we want to give today is the money to pay the coupon that comes up in a few days is on the account, so that will be paid. And of course, as we have demonstrated now for almost a decade as an issue in the German SME bond market, that's also our intention for all future commitments we have from the bond. You're probably also aware that we have this, in comparison, relatively small Czech bond maturing at the end of this year. The outstanding volume there is around 3 million euros, and that is also a firm element in our cash flow planning, and will of course be repaid. In relation to that, we are not planning any capital markets action. So Interestingly, some of the investors we know that hold the bond have asked whether we are planning a follow-on product, and they expressed their interest. It's not something we're contemplating, which doesn't mean that we may not look at the Czech bond market in the future, given that of course now the German SME bond market is in dire straits, but not in relation to the repayment of this approximately 3 million euros of outstanding. But it's good to know that some investors at least would be interested in the follow-on product. So the next question is, how should future capital requirements be covered? Are equity or debt measures planned? Well, I think we have to be very careful in what we say here. Of course, we are managing our capital structure. I think in relation to building or adding new capacity in line now with the updated volume target for the year in 2024. That is something we are at this point confident we can realize based on the back of project financing provided by the lenders that we have already been working with. So it means commercial banks that provide this type of project financing. We, in terms of capital market, as I said, we don't expect to become active until the end of this year. There is definitely trying to, as I mentioned before, clean house in our balance sheet so that we can focus all available assets to the development of our business. And we are working now very hard on fine-tuning our approach to the integration of storage into our capital deployment. So whether that is hybrid, whether that is storage only in a utility scale setting, but also behind the meter. So there's a lot of modeling, given that the revenue streams from storage are not as straightforward as from PV generation. We also are facing financial institutions that are only at the beginning of the learning curve about that. So even if we are convinced that installing a battery in any of our markets is a great idea, I mean, of course we need and want to include debt financing, and that is essentially where we were in our discussions with banks regarding the merchant model 2 or 3 years ago. There's a very strong willingness and interest by the banks to learn. So we engage with a lot of them. As I said, we do a lot of modeling, which we're trying to communicate. Of course, the banks, and we also involve some advisors in this process. But the next 12 months, I would say there's still going to be a lot of work on the bankability. There are, of course, also changes in the regulatory framework. So certain, for example, the ancillary services market is of course very advanced in Australia. It's quite advanced in Hungary, but in the other markets, it's not fully. So in Poland, now the expectation is that in the middle of next year, an ancillary services market will develop. This has been postponed in the past 2 or 3 times already. And ancillary services, of course, are a fundamental important revenue stream for energy storage. That actually these revenues get the return on investment above the cost of capital line. So there's a lot of work. It's dynamic. We're very focused on this, and we strongly believe in the importance and viability of energy storage in hybrid settings and storage only. And coming back also to Regen, I mean, storage in renewables is something we've bet quite a lot on also through this investment. And I think when we exited our projects that we co-developed with for a while with Canadian Solar, we then decided that was our first pivot where we said from now on we will only develop in Australia based on the reagent technology, which has gotten us to the point where we are with Yanari. This the commissioning of CAWOP, of course, is a very important milestone because it will allow us to bring in various potential investors and other partners and show them. And the fact that we believe in this direction is reflected in this addition of four new projects to our pipeline. And as Michael mentioned before, we're looking at other sites in Australia and beyond. So when we talk about hybrid, of course, it's not only PV, but also, of course, reagent and its applications. When is a new CFO coming? Well, I haven't even warmed up my seat, but well, the situation is such that since I took over, a lot of focus has put a lot of focus in strengthening the team. So a lot of several key positions in the financial department have been filled with newcomers. So we have a new head of accounting, with a new head of treasury. We've also strengthened with newcomers our controlling department. But last but not least, a newly created position of finance director, which essentially is a deputy to the CFO, has been created and filled with an experienced person. So and now we are working in multiple areas to improve our processes, also in identifying ways how to improve our balance sheet structure and mobilize resources from all corners of our operations. And last but not least, also to be a driving force in our already some time ago commenced process of implementing a new ERP system. So this changes and strengthening of our finance departments have now been the core focus of the last 2 to 3 months. There, I have to say, I feel that we have made significant progress. As a result of this focus, we have not commenced the search of a new CFO, and in the next couple of weeks, we will, across the management board and also in cooperation with the supervisory board, discuss the timing of commencing such search. So probably there'll not be any immediate news on this topic, but of course, CEO and CFO should be 2 persons, and definitely there will at some point be a CFO, and I think I hope it will positively resonate if I say that we want to get it right, and rather take our time to bring in the right person at the right time. But now, of course, it's always hard to judge oneself, but I believe and I hope that it's not so detrimental that I am filling this position on an interim basis. And I do see a lot of areas where we are making progress since I took over. The last question is, what are your expectations for the solar technology segment in terms of revenue and EBITDA? What influence do the significantly lower module prices have? Well, so when we look at the revenues and also EBITDA for the first half and compare it to last year's first half, actually revenues and EBITDA are very, very similar. The significant growth in revenues and EBITDA in our technology distribution segment has occurred in the second half of last year, to a very large degree driven by battery sales. And we do see the potential that also the second half, between now and the year end, there will be a pickup in activity. So we would hope that a significant part of our revenues and EBITDA will come from that. On the module prices, of course, Well, there's been a significant reduction in module prices. 12 months ago, we were at the level of 26 to 28 euro cents per watt peak. Now we are firmly below 20, 17, 18. We've seen some spot offers even below that level. So the same number of megawatts means there's less volume financially. Well, I think the margins as a percentage are to a large degree immune to this price levels. Funny enough, actually, with lower prices, sometimes even the margins as a percentage can go up. We have been quite, I think the impact of this reduction in prices, which happened relatively quickly on our existing stock, has been rather low. So we have significant stock with batteries, but we had very little stock of modules. So the impact there has been really, really limited. But overall, we expected this significant reduction in module prices, of course, reduces the investment cost of solar, and that this will lead to increased interest. So not only at the utility scale, but also for behind the meter installations, and all the way to B2C applications, lower prices, which may be met in the next couple of months by, again, rising electricity prices, could actually fuel volumes across all segments. So I think this lower module prices will have a positive impact on our segment itself. I think the impact of this in the next couple of months will probably be very, very limited in both directions. So there shouldn't be any negative. So the negative impact we have already seen by having a write-down on our inventory. That hasn't happened. Whether these lower prices will drive up volumes between now and year end in such a way that would be material, I wouldn't be convinced of at the moment. So actually, the question was whether this guidance, our new guidance, includes increase year on year for the segment. So the answer on that is no. We are currently conservatively assuming that we will have lower revenues and lower EBITDA than last year. But again, we will work very hard to land above the new guideline. So if there are no further questions, then we would like to thank you very much for your attention today. And of course, I would like to reiterate that we are here to take your questions on a bilateral basis. So please do reach out if you need more clarification. And I would like to thank Michael to be here for the first time after quite a few years.
Yes.
And also to our team here. And I'm convinced, and we'll do our utmost that 3 months from now, when we present our Q3 numbers, we'll all be in a better situation, and we'll have a better story to tell. So thank you very much.
Thank you, everybody, for joining.
Have a nice rest of the day. Bye-bye.
See you.